Hello, welcome to the weekly technical analysis review for Monday, October the 7th. I'm Rafi Barajan at XM.com, and this week we're going to be looking at the dollar yen, the pound dollar, and the dollar versus the CAD. So let's start with the dollar yen pair. We can see that the near-term outlook is somewhat mixed. The momentum indicators are fairly bearish. The stochastics are pointing, though, despite being just at the oversold level, pointing to a potential upside reversal. Stochastics, the MACD is just at the zero level, so we've seen that positive momentum slowly fade since prices peaked at 108.47 back in September. At the moment, though, it's proving difficult for the intraday upside momentum to gain traction. There is stiff resistance coming at the 38.2% Fibonacci retracement of the outlet from 104.44 to 108.47, so that's at 106.93, also where the 50-day moving average currently lies. If dollar yen manages to overcome that resistance, the next hurdle could come at 107.52 at the 23.6% Fibonacci, and then the pair might be able to challenge that September peak of 108.47 and resume its rebound from that three-year low of 104.44. To the downside, we've got support at the 50% Fibonacci at 106.46, and then slightly below that is that mini downtrend line. So if those support levels do not hold, it's likely we could see dollar yen accelerating its decline and potentially head back towards that three-year low. In the medium term, though, it's still looking fairly neutral for dollar yen. Let's now turn to the pound dollar. It's again a mixed picture. In the near term, RSI is flat at 50. The stochastics, though, are pointing outwards. And looking at price action, it is within the Ichimoku cloud. Again, neutral picture for the short term. The medium term is also fairly neutral to bearish. We would need to see prices break either way above or below the Ichimoku cloud in order to get a clearer picture of the next direction. We do have prices at the moment are hovering around the 23.6% Fibonacci retracement of the long-term downtrend from 1.3381 to 1.1957. So slipping below that level would increase the risks to the downside. We do have the potential support at 1.2215 at the 50-day moving average. Below that, we've got the previously congested area of 1.2208, but if prices are unable to hold above those key levels, we could see that three-year low of 1.1957 becoming a realistic prospect once again. To the upside, we will need to see prices break above the 1.24 handle, just above the at the upper level of the Ichimoku cloud, and then we could then see pound dollar being able to head above 1.25 and above its September peak of 1.2582. And finally, for today, looking at the US dollar versus the Canadian dollar, it's bearish in the short term. We can see from the stochastics percentage K line is crossing below its percentage D line. RSI is also heading downwards. There is immediate support, though, coming from the 200-day moving average as well as the 50% Fibonacci retracement of the downleg from 1.3564 to 1.3015. So that's around 1.3290. If that support fails, we could see the next key support coming from the intersection of the 50 and 200-day moving averages at 1.3255. Below that, we've got the 38.2% Fibonacci at 1.3225. If dollar CAD drops below 38.2% Fibonacci, that would shift the focus back to the downside, and then 1.3145, the 23.6% Fibonacci, would be the next target. On the upside, we've got the 61.8% Fibonacci. That's proven to be a very difficult resistance for the pair. It's failed several times to close above that level, and again at 1.3354, that's the level to watch for to get a signal whether or not dollar CAD is able to turn bullish again. At the moment, though, it's still very much neutral. We can see that sideways range has been in place since the summer. So we would need to see either a break above the 61.8% Fibonacci or a break below the 23.6% Fibonacci for dollar CAD to break outside of that range and set the next direction. So that's it from me. Thank you very much for watching and have a great day.